Hi, how are you? Let's start a series where I show you the best posts from day trading subreddits. They'll either be the most helpful, the funniest, or ideally a mix of both. I'll only give a tiny bit of my own input. Let's go. Profitable traders, what was your aha moment? When I quit blaming the market for my failures and adopted the phrase, the market doesn't give an F about you. Advice I can give, and also something I'm still very much trying to perfect, is not staying in too long. Book profits under all-time high levels. If a breakout occurs through the all-time high level, then consider getting in again. But profit booking is something I really had to address. Always trying to not leave anything on the table can make you lose money. Everyone gets exactly what they deserve from the market. I love this one. Just think of all of the stories from Wall Street bets and people gambling all of their money into short-term expiring options. Sure, some make insane amounts of money, but most of them fail. Our trading results are a direct reflection of our efforts and our decisions. Looking at the bigger picture/time frames instead of just using the 1-minute chart. Using the trend and buying the dips, shorting the pops. Focusing on only 1 to 2 profitable setups and ignoring the rest for the time being. Not chasing by realizing another trade/setup will come. The market will always be open. My bank account won't if I'm reckless. Proper sizing, knowing when to add or to get stopped, and when to scale for profit. The first tip you posted also helped me significantly. I was getting shaken out of trades consistently when I only focused on the 1-minute chart for day trades. Going to a 5-minute has helped me have much better entries and exits. Don't forget to back out further to an hourly and 15-minute chart spread over multiple days or weeks. Patterns will form over a few days and you won't see it very clear on a daily or won't see it at all on a 5-minute. Very helpful for swing trading or getting a layout for the next day. No single moment. You just grow over time to embody the knowledge and the skills, through practice, you develop on the journey. But these areas certainly define my trading now. 1. Risk management. I don't move stops, add to positions, size up too much, or jump out before a sensible risk-to-reward target. 2. Simplify things. Strip down those charts and strategies. 20 indicators isn't likely to give you an edge. Focus on identifying trending or ranging conditions. Have some plays ready for each and be patient. Basically, pullbacks and mean reversion at extremes type plays. 3. Not listening to others. No signals, no need for hours a day scanning YouTube for those secret winning strats. I've said that. No FOMO because someone else got in how they should have, or how I thought they should have. Just my own analysis and execution based on what works for me. 4. Confidence. I know what will generally work, and I know how to identify weaknesses should I need to tweak anything in my strats. I'm not afraid to pull the trigger, and I don't beat myself up if I F up. We all do, just something to address and try to improve next time. 5. A focus on process. You've heard this before, I'm sure, but it really will make a meaningful difference if you make a conscious effort to follow your plan. Track everything as you're finding your feet, and when you've found them, to be honest. Know where your weak areas are and focus on them. Entries, holding trades, risk, market conditions, session times, etc., etc. 6. A diet of strong whiskey, cigarettes, and Red Bull. Your body is a temple. When I felt proud of myself for taking small losses quickly, and when I started really trading the chart. Maybe controversial, but I also started watching low time frames like the 1-minute, 30-second, and 15-second, which helped so much. Obviously, I look at higher time frames as well, but the microstructure is so important to identifying momentum, trends, and reversals. Bro, I swear man, the losing trades were gonna reverse eventually. How did I blow up my account? Says me waiting all day for GTRX to just nudge closer to my buy price so I can lose less money than I made yesterday. Waited till market close and did okay. Mostly learned, never again. Clearly it didn't work the first time. Not enough sample sizes. Need to blow up more accounts to determine if it's me or the market that's wrong. Probably the market. Sarcasm. It started with me losing lots, then being thankful to lose only a little. Now I use self-talk to trick myself into enjoying taking small losses. You can make the right calls but still lose money, or make bad calls and make money. It's not always your fault. You also should look for quick reactions off your levels. Don't take pain. If the trade goes against you, cut it quickly because you can always get back in. Multiple time frame analysis. Entry is when all time frames have the same signal. No compromise, and parent market should be in the same direction. For reasons beyond me, it never clicked that all time frames should give the same signal. Do you mind going a little more in depth about this? Like, are you looking at candles with 1, 5, 30-minute wicks, or talking about expanding from days to months? Probably both? It may be hard to explain, but I would appreciate any attempt. Not the original commenter, but I understood it as matching trend lines on macro timeframes as well as smaller ones. Moving averages converging and crossing up, making sure RSI has hit values over 70 in either direction on multiple timeframes, or for that matter, any oscillator bottoming or topping. Personally, I don't think it needs to be like that. I think what he's actually talking about is that on a 1-minute time frame, it might look like we're in a strong uptrend, and it may seem like it would be a good idea to get in and go long for a momentum trade, but if you zoom out to something like the 1-hour candles, we might be in a clear downtrend. So really, this comment just enforces the fact that we need to look at more than one time frames, because all of them give a different picture. Different time frames tell different stories, and if they're all telling a different one, then maybe it's not a good idea to get into a trade. But, like he's saying, if all of them are telling the same story, then that can give us a little more confidence. Here's something slightly related. What do you mean by price action only trading? What's the concept of that? Means you do not rely on indicators. When you capture the charts properly, you will never use indicators. It's like pro level. Why are you typing in caps? Ops, my cap is on. Can't say I'm as profitable as I would like to be, but in phases. A. You need to have edge. To get this, I stopped taking all plays but a very specific setup, and then whittled that setup further. B. You need to protect your capital when your setup doesn't work. Pretty simple. Set stop losses. C. You need the psychological strength to only play your edge. Work in progress. Simple, but not easy. I get caught up on C still. Thanks for this. I can relate to the experience of C, or what I would call discipline. To just stay out of the markets on days when it's not moving with momentum. The biggest losses come from breaking one of your own rules. Be it from being too greedy and not taking the profits after your price target has been hit, not adhering to your stop loss when a trade doesn't go your way, trading at a time you'd usually never trade, or what is essentially gambling on penny stocks. Whatever it is, if you break your own rules, you'll lose more than you win. Establishing rules that produce profit. The only way to do that is to learn by experience. One suggestion I'd make to you is to get into trading with real money in small amounts. Paper trading can only go so far. It can't help you handle the pressure of live trading because there's nothing real on the line for you. It won't prepare you emotionally and psychologically enough, in my view. As you see small successes and failures, you should be able to start establishing rules of your own, modified/adapted from those you read from others online. The best way to learn is by doing it. Try making 100 trades with small amounts of capital each time. Write notes on each trade, whether you win or lose, and try to make sense of what happened. At the end of those 100 trades, I bet you'll start finding rules that work for you. And if you still can't figure it out, try another 100 trades, or let it go. Just be an investor, DCA, and wait for a nice profit margin to take your money out. Not everyone needs to be a trader. On a side note, anyone can do this. It's about discipline and not giving up. You don't have to be a super genius to be successful. You are enough. Most strategies and most management styles work. I don't know about that. It's all about consistency and discipline. Make your rules and stick to them. Don't change them every day, week, or month. You have to just stay consistent. Our edge is very small. A few bad trades and you can give up your entire edge. Consistency is key. That price moves toward liquidity, be it up or down. Wherever there are an F-ton of stop losses, then the price is more likely to go there. So when I think it will hit the support line and bounce, most likely it will hit it and continue to collect the stop losses and then reverse. Another aha moment is that futures are better than options, at least for me. Me too. I'm still on the ah moment. I'll let you know when I get to the ha moment. For me, it clicked when I saw that certain strategies work best for certain charts and not for others. As a beginner, I thought that everything could be used exactly anywhere. That was my fault. This one's interesting because it goes against some of the things that I've heard. That's really just a testament to how little is agreed upon in regards to classic technical analysis rather than pure price action. The wizard Matt from Daytrader Next Door on YouTube doesn't use indicators to take positions. He trades based on what price has done around certain levels and uses that to take a position. Often, he sells into strength and buys into weakness on reversals. Anyways, the other thing I wanted to mention is that this goes against the idea of markets being people. Hypothetically, strategies should work the same almost anywhere, because price action is a reflection of human behavior, and almost all action is driven by humans. Even humans programmed the computers, so those can also just be considered very fast humans. Although, I'm not sure if people are using neural networks and AI to independently develop their own trading system. This is a topic I'm very interested in, so if you know more, let me know in the comments. I'm assuming it's almost impossible to take the data from the stock market and convert it into code so that a neural network could actually learn it and through evolution develop a smart system. But let me know if you know more. I don't have an opinion on this, but I just wanted to mention it since it's a very interesting topic to me. Yeah, stop talking and get back to Reddit. I had several. It's not simply one factor that turned losing into profitable. Profitable. From losing to break even took discipline to eliminate the big losing days. I had to have emotional and mental strength to adhere to daily and weekly stops, have proper risk management per trade, and recognize when I wasn't mentally or emotionally ready to trade or to be in tune with the market. To become profitable, I had to start letting winners run to my target instead of trying to take them off early because of fear. Basically, having confidence in my skills. Throughout the whole process, my trading approach has changed from refinement, but my preparation and review has not. Having that routine helped form discipline around all other aspects of trading. When I realized small and consistent wins trump lucky big wins and having a simple strategy plus patience equals profitability. If you can't relate to trying to catch all of the home run trades sometimes, then you're better than me. I stopped trying to make work for me what worked for others. Books, interviews, old videos all should be viewed as informational and historic. We don't predominantly run trains on Steam anymore, even if that once was the best way to do things. Also, even once you're profitable, you get greedy or get the fear of missing out. After 3 years of profitability, I got caught up in the Reddit craze and had my worst 6 months in 3 years. I've been back on track, doing what I always did, and will end the year profitable, giving me 4 years in a row in December. General tips that work for me. 1. Trade small. Smaller than you think is small. 2. Don't feel you need to take every trade. Wait for the best and get over the fear of missing out. A big issue here is if you need the money. If you need the market to give you money, because of salary or bills, then you will overtrade. Knowing my stop before getting in and sticking with it, knowing that over the long run, the math is in my favor. Only trade 1 or 2 and 3 as the max times a day if an opportunity is given. Otherwise, I will play guitar or harmonica in front of my screens and do not touch my mouse and keyboard. Not trading after 3 p.m. 3 p.m. saved me a lot of money. I like this one because I'm pretty sure that Daytrader Next Door plays guitar when there's no good setup. You can see him setting it down sometimes in his videos. I wouldn't call myself profitable, but I've only had 3 red days this month and overall it's green. I can see my growth has been accumulating over the past 9 months since I started. I don't think there is an aha moment or a time when things click. People want answers, but there are no answers to trading. Everything is constantly a work in progress. At some point, you just have enough confidence in your rules to actually follow them and believe in them. It takes trials and tribulations. Journaling is a big deal. I have days where I feel I traded flawlessly, only to look back on the day and realize I traded poorly. Then I have bad days, and I look back at them and realize I didn't trade all that terribly. I find these things to happen quite often, and it's very sobering. Trading psychology is the biggest hurdle in my opinion, and if you aren't journaling, you're at a severe disadvantage from a psychological standpoint. There's also the other more obvious benefit, which is simple constructive criticism / self-reflection. In my opinion, journaling is where the work is. If you aren't journaling, you aren't working. More recent growth for me has been realizing when not to trade. Judging the day before I trade. Knowing the potential for the day. Simply because I've monitored and seen enough openings to know what the rest of the day is going to look like. I take pride in not losing money on days where there was very little opportunity. Even though I didn't make money, or maybe I even lost money, those days feel like wins. The old version of me would have been trying to figure out how to make money on those days, and I probably would have taken a bunch of trades on those days that weren't in my strategy. Another point of growth I've noticed is that I've come to accept some of the randomness to the market. I had very high expectations when I started. Basically, expected myself to predict the future, know when the market was going to turn on a dime in all time frames. I've realized I simply don't care how far the market goes or when exactly it turns around, because there's simply no possible way of knowing a precise answer. When my trading window is over, I close the program and do not watch the off hours. Try to find some level ground in journaling. Focus on the process of improving. That's where answers lie. As someone once said, process over profits. I mean, I said that, but I learned it from someone else, not me. Unless it was from me. That there is no aha moment. Boo! He's got a point though, but also not a point. There might not be a moment where everything clicks and bang, you're profitable. But there are certainly many realizations that everyone comes to where certain aspects of trading begin to make sense. I think we all have a few of those moments every day, or at least a couple times a week. I trade crypto. It's been about a year and a half now, and there are many aha moments. Countless times I find myself performing better when I tell myself to be a robot. It sounds stupid, but being greedy has hurt my profits more than it has helped. I mean, I've waited a few days to get some extra percent, but most of the time it drops or the extra money doesn't offset the days I could have spent trading and gaining extra volume. Patience gets rewarded. We all know this. We all doubt this at times, but every time it pays off it feels like an aha moment. Learning how to hedge your position was also a recent thing I learned that made me go, why the heck haven't I been doing this? I'll tell you a secret if you don't share it with YouTube. He didn't say heck. When I stopped moving my exit further and further out of greed, only to get reversed and end up with a fraction of a win or a loss. There's been many things that have incrementally improved my trading until I hit a tipping point of profitability. In no particular order. 1. Predefined risk before every trade. You need capital to trade and learn. So start small and keep tight stops. If you blow up, it's game over. Forever. Only the paranoid survive. I don't know about that. 2. The markets can and will do anything. And that's okay, because you don't need to predict the future to make money in this game. You just need the right odds and risk-reward over time. 3. Finding a strategy that fits your personality. Most strategies work, but which ones can you execute flawlessly and effortlessly? Trading is hard enough. You don't want to choose a strategy that goes against your very nature. This one's really good, because some people are amazing at swing trading, but I know that I could not do that. Something about holding something for that long, I can't do it. I mean, I could, but it's way more easier for me to hold something for 1 to 5 minutes or 1 to 10 minutes. And some people who swing trade couldn't imagine trading that quickly. You have to find something that works for you personally, because there are a lot of different ways to make money. 4. Journaling. Keep track of your data so you know what to improve, what to adapt, and what to discard. 5. Rules. Find them, write them down, obey them at all costs. They are your lifeline in this chaotic environment. Without them, you will drown in all the volatility and emotion. Disregard at your own peril. Ooh. 6. Rate your setups. Not all trades are equal. Some have a 90% win rate with a 5 to 1 risk reward. Some have 50-50 odds with a 1 to 1 risk reward. Don't trade these with the same size. They are not the same, so don't treat them as such. 7. Moving your stops/averaging down. Don't do it. If the trade fails, accept it and move on. Losses are part of the game. Accept them along with your risk level or don't take the trade. Think long term. And if you ever get tempted, remember, winners add to winners. Losers add to losers. What does this button do? It says stop loss. When I had 5 shares of Tesla and they surprised earnings with profit, my first risk I took gave me the confidence to take more risks. Haven't quite gotten that first high feel since. I worry that this isn't a joke. Chasing the high of gambling on earnings is a recipe for, well, excitement, but also financial destruction. I hope that you found this video informative or at least enjoyable to listen to. There were lots of helpful points in here. I would love to do many more of these videos, because there's a lot of valuable information on Reddit buried beneath many layers of garbage. Of course, some of these comments were probably from traders who think that they qualify as profitable because last Tuesday they were green on the day in their paper trading account. But there's a reason I avoided technical comments and stuck to ones on risk, emotions, psychology, and helpful behaviors. Happy trading, and good luck out there.